Good day everyone, I am Victor, moderator for this webinar. I welcome everyone for today's webinar, which is Form 7203S Corporation Basis Reporting. I would now like to introduce our presenter for today, Jason Dinesen. Jason Dinesen, LPA EA, is an entrepreneur, tax expert, and CPE presenter. Dinesen brings over 15 years of experience helping individuals and businesses with accounting, bookkeeping, tax preparation, and business advisory in various industries. Dinesen is a regular CPE presenter at MyCPEs. Dinesen is known for sharp text interpretations, and he quickly brings his analysis for the latest updates and IRS guidance to the professional community. I would now like to hand over the floor to the speaker. Over to you, Jason.
All right, thank you so much. Hello and welcome to our webinar on S Corporation basis and the new Form 7203. Let's get started. So this webinar is all about how to calculate basis of a shareholder of an S corporation. We also look at the Form 7203 and the usual boilerplate disclaimer. This is not tax advice, so always seek appropriate counsel before making final decisions. Let's jump into our material then and start talking about basis. How do we define basis? So this webinar is about S corporations. Partnership partner basis is similar. There's a few differences with partner basis, but it's very similar. The one sentence definition is that it's simply that owner's stake in that business. It's a partner's stake in the partnership and the shareholder's stake in the corporation. And if we expand that just a little bit further, I would say that basis is the money and property put into the entity minus withdrawals from the entity, things like distributions, add in the net income from the entity and subtract any losses from the entity. So what do we do with basis? Why is it important? Well, it determines a number of things. It determines year to year whether or not distributions are taxable. If the entity passes through losses, we always need to be aware of amounts at risk. So you have regular basis rules. That's what was on the last slide. We also need to keep in mind the at-risk rule. The at-risk rules, by the way, technically apply to any entity, not just S corporations and partnerships. The vast majority of the time, it is S corps and partnerships. I've never seen it myself on a Schedule C or Schedule F, and certainly not on rental property. With S corp basis, you have what's called the ordering. Now here's a twist with that ordering on the prior slide. S corporation shareholders can make an election to change the order of those losses. This would be for basis tracking purposes. Let's talk about debt of an S corp. So entity debt, meaning debt that's taken on by the corporation itself, does not ever increase basis. Wow. There's an exception for loans from a shareholder to the corporation. So when shareholders make loans to an S corp, they have two types of basis to track: regular basis and loan basis. All right, let's talk about how to track basis. We talked about this earlier, that it's the shareholder's responsibility on the 1040, not the responsibility of the entity. And always remember, items that go into basis are determined at the entity level. Everything is determined at the entity level. As far as those positive and negative numbers, what are they? Well, that's all determined at the entity level. But the impact on basis is calculated on the 1040. Now, this is an S corporation course, but sometimes we have to walk in both worlds just because partnership basis is pretty similar. So this is Form 7203 right here. So you have, Form 7203 starts with all of the additions to income. These are all of the potential positive numbers, the income item. And this walks through the calculation of what is the debt basis versus the full amount of the loan. And so are any paybacks on that loan taxable? And then at the very end is like the bottom line, allowable losses and deductions on the 1040. What do you do if basis has never been tracked, this comes up more often than you would think. I don't know that you see it as much now that Form 7203 is in play and you have to do it. But certainly prior to Form 7203, it was quite common to encounter basis never being tracked. Now, in the partnership regulations, the partnership regulations talk about rebuilding basis based on this regulation. This regulation says you can only use it when the circumstances are such that you can't practicably use 705A, which is get your hands on the K1. What about S corps? Well, the IRS released this document. This is really an interesting thing to read, I think. There's a link on this slide here. And it uses the same methodology as in the partnership regulation. And that actually brings us to the end. All right, well, thanks so much. Thanks, and have a great day.